Right, let's talk to Multi Corp, Managing Director of Traders Leadership Council, a man making his debut at Tip TV. What football team do you support?
That would be the Erste FC Kaiserslautern in Germany.
I'm so pleased I don't have to repeat that. And somebody suggested that they are the equivalent of Crystal Palace in Germany.
Well, I accept that. I have to support them for a very long time because that's where I come from, that's where I grew up. Unfortunately, they have been relegated to the second league.
Right, okay.
Well, they're called the Red Devils in Germany.
The Red Devils, that sounds more like Man United. Okay, so the Traders Leadership Council. I love these big, bold headlines. You've sent 4 charts, 1, 2, 3, 5 charts. Tell us what you do for a living, Multi.
Yeah, absolutely. Apart from the trading, I'm always quite interested in kind of cracking the most difficult problems. And in trading, the question I wanted to address was, what is really hard about trading? So I looked at how many traders win versus how many traders lose. And we have some factual data actually from the United States.
Well, this is the first slide. What is this telling us?
So this is telling us we were looking over a quarter. We were looking at the profitability of more than 100,000 trading accounts.
Okay.
And we've seen that if you look at that period, beginning of a quarter and ending of a quarter, 70% of the accounts actually had less money in the account, and 30% had more money in the account at the end of that period.
So I would have thought the losers would have been higher than 70%.
That's correct, but as I said, that's factual data released by the United States Futures Association, so that's reliable data.
Okay.
I've also heard higher numbers, but that's something we can start off with, and it's reliable. It still tells the same story, right? There's more people losing than winning. I think that's the starting point. And what I liked to do, and what I did in a research initiative, was to find out what's actually at the heart of that. What's the root cause? What do people really find hard? Demystify that.
Okay.
That takes us on to the next slide. So
Let's move to the next slide.
Yes. So what I set up was what I would call a diagnostic. So I looked at 22 attributes that are important in trading. We can group them in.
So these are your 22 attributes?
Well, I discussed those with successful traders, with all sorts of traders with varying levels of experience, to make sure that I capture what everybody would find hard in trading. You could group them into psychology-related attributes, then there are attributes around technology, then there is stuff like do I have enough capital? So I identified categories that everybody would find difficult in trading. And then I went out and asked, in the beginning, I asked a group of 50 traders, and all of these traders have at least 2 years of experience, up to 30 years experience in trading, really proper traders doing that for a living, to figure out what kind of challenges they face. And then I broadened it out to the retail traders, and I think by now I've asked these questions to more than 2,000 traders in total.
Okay.
And got a really good feel for what people find difficult in trading.
Right. Okay.
What do you say? What do you think would be most difficult?
I think trading is the most difficult game in the world. And my view is, and I've always said this, if I'd gone to college and learned to be a surgeon, I would have gone to work, I would have got the utensils, I would have cut the person open, I would have done exactly the same method every day, sewn the back up, off they go, next day, next operation. So stock markets, I've got my lucky pants on, I've read my JJ Murphy book, I've got my economics O-level, A-level degree, okay. I come in, I think Vodafone are a buy, I've placed my bet on the table, and they always go down.
Right.
That's why it's the most difficult game in the world.
Absolutely, that's absolutely right.
It always changes the minute you start playing the game.
Exactly, and I wanted to get under the skin of that. What's really driving that? Is it because your analysis is wrong? Is it because the psychology is the problem, or what is the problem?
They're all problems, because it's the hardest game in the world.
Yeah, absolutely.
Okay, well, let's move on to the next slide.
Exactly. The next slide is when the aggregated feedback from the survey. So 74% of the respondents to the survey would put mastering trading psychology on top of the challenges that they are facing. Secondly, the execution piece. When I have a plan, how do I make sure that I actually apply the plan as it was intended to be applied in the markets? These seem to be, with 62% and 74%, the most prominent challenges that traders are taking. And I would put them more into the behavioral category and more into trading psychology category. And then on the other side, the question when you look at generating consistent profits, which was cited by 56% of the traders I had a conversation with, when you dig a little bit deeper, I would mostly say it's really hard to have a system that is designed to deliver consistent profits over time.
I thought that would be a higher number as well. Interesting.
But the trading psychology and the executing the plan thing are surely just kind of factors in risk management. That's essentially the problem here. We had the stat at the beginning, but the most interesting stat is usually the high percentage of winning trades versus losing trades, but yet how few people make a profit, and that's the key story of retail trading.
Right.
And that's all about risk management, and I think that's what these are an element of. This kind of trading psychology thing is simply a kind of another word for getting your risk right and not letting your losses run and that kind of thing, and putting stops in and taking keeping to a plan. This is all risk management.
I think that's exactly the thing that you just said, keeping to the plan. I think it's one part of a story is to have a plan. The other part is to execute the plan properly and to follow through with your risk reward strategy that you've defined.
Okay, we need to move on to the next slide.
Yeah, absolutely. So
what is this telling us?
You're now going under the skin of that, and that's what surprised a lot of traders. So what this slide is telling us is looking at over a time span of 2 years at 12 million trades being placed in currency pairs, and we're just counting the winners and we're just counting the losers. We don't look at size. We're just counting the winners, and we just
as in a winning trade and a losing trade.
Exactly.
Okay.
Again, 12 million trades over a 2-year time period. And what traders typically find very surprising is when you look at, on average, the blue bars represent the winning trades. The red bars represent the losing trades. We actually found across these 12 million trades, more winning trades than losing trades. And that was quite counterintuitive what I was hearing from a lot of traders, but I think it aligns nicely with what you say is people place more winning trades than losing trades. But still 70% of traders lose
money.
So why do they do that?
Because they run their stop losses.
Exactly. They get in love with a least performing trade. They throw the best money at the worst trades
Bad
for a very
trades,
long time.
double up the wrong way,
Exactly.
etc.
So that's what the final slide is showing.
Okay, so let's move to the final slide if we can.
That's looking at the 12 million trades again from a different angle. Now we're looking at the size of the winners versus the size of the losers. So the red bars now representing in pips how big on average have been the losing trades in the currency pairs ranging from Euro US dollar to Euro GBP. And
so the average loss in the euro dollar is 127 pips.
That is correct.
But we've had a downtrend for a year. Mm-hmm. And this is a study of 2 years, you said?
Yes, that's right.
So my assumption is everybody in the world is short euro dollar.
Right.
Okay, so I'd imagine 95% of people must have made money in euro dollar in the last 6 months.
That's probably true, right?
But the year and a half before it, the losses have been colossal.
Exactly. I think one key takeaway here from this slide is that we see on average in every trade, people are losing double the amount compared to what we're winning in a single trade. So what does it tell us? It tells us exactly what we just talked about a minute ago. People hang on to their worst trades, throw their best capital at the worst trades. And typically when you look over a longer time period, it is over a 12-month time period, which is typically just 1 or 2 big trades that we're losing, and where we're losing the whole capital. So it happens over a longer time period, but then we're throwing most of our capital at 1 or 2 really devastating losing trades. And on the other side, they close winning trades far too early. So whenever the position, and that's a psychology element, just turns into profit, they want to close it as early as possible, and they don't let it run to the target. Coming back to your point, not following through with their risk management.
I suppose what's happening here as well, and this in the last slide, the 2 kind of winningest trades were quite thematic ones. You had the Aussie dollar Kiwi, and you had GBP JPY. Mm-hmm. Those are both quite thematic central bank plays, and so you might select those are longer term plays. If you're looking at the kind of disparity between the tightening phase of the Kiwi central bank versus the Australian central bank. You look at the Bank of England versus the Bank of Japan. Those are long-term trades. I think it's what's happening a lot. We talked about this long-running trading in euro dollar, but people aren't in it for the long term. I think these trades are people making big losses. They're kind of trades where people dip in and dip out. And so though you've got these long-term trends, people aren't playing the long-term game. They're just dipping their toes in the water, getting scared and kind of jumping out when volatility comes up. And it would probably be quite interesting on this chart to see volatility plotted on each of these currencies and see how much that plays in. And I bet there's quite a strong correlation between volatility and kind of this kind of win to loss ratio as well.
Well, I've got to say, Morty, we've run out of time now. That was the best debut interview I've done.
Thank you very much.
Okay, obviously I can't pronounce your German football team, but I'll work on that. Please come back every fortnight and come up with stunning statistics like this, because if I was a day trader, indeed any type of trader looking at this, okay, this reinforces, okay, the rules, doesn't it?
Thank you very much. It's exactly what I want to achieve.
Absolutely brilliant. Okay, that's Morty Corb, Managing Director of Traders Leadership Council, a clear leader in statistics for traders out there. Right, let's take a very quick break, and we're going to go into a pre-record we did first thing this morning with Mr. Francis Hunt, the market sniper. Then we'll be back with Maria Saha, Head of Trading, a little bit of glamour from Prime Wealth Group, talking about generating alpha in B-Sky B, Vodafone and a small oil stock. We will be straight back after the break. Thank you.